Tech stocks have been surging lately, recouping their losses from earlier last month. Joining us now to discuss what's working, what might still work in tech is Gene Munster, Loop founder and managing partner. Big gains. What's left? Two FAANG stocks, you point out, Meta and Amazon, both up 25%, but most of them are up 15 or so. Have all rebounded. Too late?
I think in the case, the simple answer is no. If you look at the rebound in Meta, for example, up 25%, as you said, it still trades at 19 times 2022 earnings, expected to grow 13%. That kind of is consistent with 15% growth for Amazon and 18% for Google. And so I think when you put this together, Joe, there still is room for upside. You need to be judicious in terms of how you pick FAANG. You can't just own FAANG more broadly. I would draw the line, too. We mentioned Amazon up 25%. This is a company in a great position long term. But near term, I would be more cautious. This trades at 70 times this year's earnings and has a weight around it in terms of the cost and logistics side that I don't think is going to ease anytime soon. And just to put some quick perspective on this, if you look at their logistics employees globally, it's over 1 million. These are most susceptible to changes with inflation. Of course, we've had some of the vectors related to the union that really doesn't add much to the overall expense structure. But I think when you put these two together, if you look at Amazon, for example, versus Meta Facebook, I would much favor Meta Facebook. We are owners of it. Loop is owners of Facebook, in particular because a belief in the metaverse. Despite all of its hype, I think that the company will be successful at building a sustainable business. And again, when you put it in context of earnings, it just looks attractive. So the simple answer to your question, Joe, is that you shouldn't own these blindly. I think you should be judicious. I think Facebook is a company to own along with Apple.
What took the whole sector down? It was ahead of itself, obviously. And then that begs the question, what changed to bring it back so much?
What took it down was the concern about interest rates. Of course, tech companies are more susceptible. These companies that we're talking about haven't been hit nearly as hard as broader tech. And just to give you some quick context on that, if you look at the pullback in FAANG, what took them down, to your question, those stocks were down on average about 15% towards the beginning of the year, at the beginning of the year. If you look at the second tier, we'll call that emerging tech. These are companies that went public in 2021. Those stocks were down 30% from their issuing price, down almost 60% from their peaks. And so I want to put the conversation about what took these down and to have some perspective around that, is that FAANG has done better. The reason, of course, it's done better is because this flight to quality. And I think that investors should generally have exposure to both. I think having quality, a couple quality names within FAANG, and separately kind of this emerging class of tech, I think that there is some outsized returns in that segment as well.